Hello everyone, Jesse Webb, Traders Pro. Market conditions remaining bullish in this bull market, and seeing some topping indications here. We'll spend a few minutes on going over that today. And overall bullish market conditions, we're starting to see this upper momentum line starting to flatten out right here, caused by this current rally that we've got. Can't see it much here on this chart right here, but we've had that big move higher, starting to flatten out a little bit and potentially starting to tick back higher. This number right here, 10.63, that's the current level. So we're still extended to that upside as far as the overall momentum of the current trend, but that's the long-term trend, the bull market trend. But we're also seeing some overbought conditions in momentum. That's really the only one. Breadth is holding steady, but it's starting to tick back the other direction, which is interesting. And sentiment is also continued to remain strong right here. If we look at the buy-sell ratio is positive, but not aggressively so. We haven't seen it move up here like this. It's a little bit more like this, which is an interesting price action. We really see, the S&P 500 and a lot of the indices are just so heavily weighted towards FANG type stocks, and those are really the overall stocks that have moved the market aggressively this past move. But we are still positive. Sentiment is reaching that upper level right here. This is one to be cautious of right here. Let's take a look at a couple of others. We've got NASDAQ that's in that upper range. We've got bonds, which are also in that upper range. They've had a nice move here the last few weeks. Also, notes are in that upper range. And volatility is at the bottom end of that range. So really, you have equities, which are at the upper end of the range, volatility at the lower end of the range, and bonds and T-notes at the upper end of the range. We also have oil, though, which is at the bottom end of that range. So we've seen, I think we've seen oil moving all the way back down as equities have been moving higher and interest rates have been coming down as well. So all of these things that have contributed to this rally in the last few weeks are extreme right here. So some areas of caution, not necessarily to go aggressively the other direction, but just to be patient, waiting for an opportunity for some of these trends to pull back into a more sustainable location. We'll look at some additional charts right here. In fact, let's start with that. We'll go to S&P 500. If we look at the market ETFs, we're seeing buys across the board, volatility down. That's a great profile. That's a perfect scenario for a bullish trend. But as I mentioned, we're extreme. We're overextended a little bit in that overall bullish trend. If we look at, let's look at S&P 500 here in that upper range. If we go to that 1-year chart, pull back into that 50618 zone. We're back up to the momentum zone on S&P 500, which is above this 236 line. So essentially taking this trend and the bottom of this trend, and it retraced all the way back down. This is a pretty common counter trend corrective location when it goes 50% and 618 inside of this box right here. If you were just to draw a box around this range, that's a pretty common retracement location. Anywhere inside of that, if you're in an uptrend and a stock is retracing back down, and if it's a good healthy counter trend, it'll typically pause and stop inside of that move. And this actually is a good retracement zone because it flushes out the remainder of the sellers. And in this case, you flushed out sellers or created additional sellers, short sellers that ended up having to cover on that rally moving back up again. So it's a good location, but now we're in that upper momentum zone. But notice it's just slightly extreme, not too bad, but I would anticipate some volatility around this area, maybe a retracement even back into that 439 range. We'll see what kind of news items and additional catalysts end up coming out that may end up driving the market higher. Leading sectors, we're still looking at construction, although some of those construction stocks are pulling back. MPTI, which has been a big runner, pulled back into that 236. If you look at that, that's actually a really nice looking indication of that. That's exactly what I would expect out of that location. When a stock is extended and it's way up above this 236 line, the first pullback or any pullback, we would expect some support around here. If that doesn't hold, in this case, it's going to be around this 30 level. But you can see how aggressively it bounced off of that area. So I'd watch that today and see if you get some continuation to the upside. It pulled back a little bit here. It's just slightly extreme, but actually let's look at 140.46. So 140 is that cutoff. So it's just slightly extreme, but back into that buy zone. And that's what we want to see on a stock like this. When it rallies aggressively, it moves higher and it gets up into this extreme range. And as it pulls back into this buy zone. And oftentimes it'll pull back to a support area. So interesting pattern there as well. Let's look at a couple others in that leading group. Beazer Home, which is doing the same thing, 2 or 3 days of a pullback. Pulled off some of the froth, so to speak, off the top, and now it's retraced back into a buy zone. This is what we want to see. When we see a big run higher, we want to see a counter trend retracement, ideally back to some kind of a zone, a support zone, and that 29.86 could be a range if we end up moving a little bit lower here on BZH for some support now in that buy zone. So a couple leading stocks in that leading construction sector. If we look at the muscle stocks group, it's actually pretty thin right here. Part of the reason is all the stocks are either in uptrends or downtrends right now. So not a lot of new stocks entering into that uptrend. So it can happen at both directions. It can happen towards trend tops and trend bottoms. Trend bottoms, there's nothing in the buy range because everything's in a sell. On the upper end of that trend range, it can be there's no new buys because everything's already in an uptrend. So a couple of things though that are starting to float back to the top. There were some gold stocks in this list. EGO, basic material gold stock, nice pattern retracement. Let's look at the 1 year time frame on that, see if that trend is any different. So we do have an uptrend on that time frame, breaking out back up above that 236 area, which is entering back in that momentum zone. The high, there's actually a decent amount of range between where it's at now and the most recent highs here. Which could pull, that could be the magnet that's pulling it towards that level. We also are seeing gold pull back and create some support. I can't remember if we just looked at that, but let's look anyway. If we have commodities here and we go to gold, and we've got this upper range. Yeah, we had, that's right. We've got a nice rally here. Let me change the color here so we can see that just a little bit on that 1 year time frame. So we are seeing gold in that uptrend moving higher, retraced, had a really deep retracement. I'm actually going to pull that chart out just a little bit more so that we can see that little bit longer term trend, that 2 year trend. This may pull us in a downtrend yet, but let's connect with this low now and this low and all the way over here. We'll pull that a couple days in like this. That retracement zone, we just talked about that S&P 500 retracement zone here. Gold has had the same thing. So now you've got this uptrend, retracement back down, and now also pulling back up above that momentum line. So here's the swing high point, and we're just looking now that we're in this upper momentum range, all of this area now is now support for this current location. So you're seeing gold move higher. You're also seeing some gold stocks pop into that list, which that EGO chart's pretty nice looking. ARDX, let's look at this one here. This one on that, let's go that 1 year time frame. On that actually was the 2 year time frame. You can see the reason why this is such a highly ranked stock is because of this move from last June all the way up to April of last year, and then kind of a long counter trend retracement. But on this 2 year time frame, you can see it's only back into that 382 range and working towards that upper level. On the 6 month time frame's got some work to do. Not overly interested in that price pattern, but it is it's fundamentally showing some green up here. Pretty nice numbers, 100% growth on lots of those numbers. So medical biotech, medical drug stock that could be interesting over the next few days. Let me pull in the remainder of those scans here, the new buys. So there's your ARDX, EGO. This CRESY on the 6 month time frame has a little work to do there as well. Nothing too impressive. AGI, some volatility. That's another gold stock towards the upper end of that range. So certainly as you're looking to add stocks to watch lists and looking for what may be in new trends or have not participated in the current trend, then gold stocks are interesting at this point. Also on the muscle ETFs, don't forget about that. Some of the new buys here. This is going to pull in both long and short ETFs. So we obviously know that oil has been retracing. So this is an ultra short, 2x leveraged on oil. And so you're seeing it move higher as oil is moving lower. So it's just a way to play a downtrend in oil without being short or without using put options. It's just an inverse leveraged ETF. So if oil drops by 1%, this is going to go up by 2%. So it's leveraged by 2x. Okay. So you can also see some leading trends sometimes in that muscle ETFs and see what's happening. Obviously, we know that Bitcoin has been having a big run, BTF participating in that move, and some of these others like home builders. NAIL is an interesting one also because this is the home builder, the entire home builder group. So we know that that construction group is a leading sector because we know that here from this sector scans construction. So if I want to own all of this, or the vast majority of that, then I can choose an ETF like NAIL, and you've got this uptrend that could continue to have that overall move. And this one has had it's pretty volatile in this last year and had a big run up here. Could certainly use that pullback, but very similar to that Beazer home chart. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.